This hidden indicator on the macro chart is suggesting a repeat of the 2017 parabolic cycle for Bitcoin. Will the buyers push the price action upwards and enter a parabolic season, or are the bears going to regain control on the short term? Let's go ahead and jump in. Alright guys, welcome back to the channel. Thank you for tuning in. I hope you're all having a magnificent day today. In today's video, we're going to be taking a look at another reason why we could be seeing a repeat of the 2017 cycle. Going over a specific combination of indicators on the macro chart. We'll be also discussing the short term in massive detail, going over Bitcoin dominance and the possibility for a altcoin season. Before we do get into it, smash that like button, hit that comment button, and subscribe to the channel. We post daily videos for Bitcoin focusing on the facts, the data, the technical and the structural information. No hype, no BS, no emotion, pure raw TA. If that is the kind of content you are interested in, join us on Telegram. It is the first link down below. You'll get access to charts, updates, videos, educational posts, news events, and everything you need to stay in the loop of cryptocurrency, with Bitcoin, and the relevant economic news. If you're interested in taking your trading to the next level, join us on VIP, where we post trading setups with exact entry prices, exact targets, exact stop losses, trade justification, exclusive analysis, and so much more. Not only will you get access to all of our trading setups, you'll get access to our group chats, our general chat, trading chart and education chat, news, help, daily video, and trade setup chat. If you're interested in access to that with close to 700 members, contact me in the pinned comment of the free channel by clicking my name, or click these links for more information. Without further ado, let's dive on in. So like we said, we have a lot to be going over. The macro, we're going to be going over Bitcoin dominance, the total crypto market cap, the total 3 market cap. We're going to be going over the short-term price action and so much more. But let's start on that market data. So 24-hour volume, guys, is down 14.4%. We're sitting at 130 billion. Over the last 24 hours, we've seen a reduction of 13% in liquidations, now at 126.9 million. Of the 126 million, 85 million have come from long positions and 41 million have come from short positions. Taking a very brief look at the last 24 hours of price action, we saw a bit of a consolidation occur up at around this $67,000 resistance. You would know that $67,000 resistance is the major bullish trigger point that we need to break above to see a move to that 70,400 region or 74,000 region, that range high area. We did say in our prior video that the 67,000 region would act as a major resistance and that we were expecting a short-term correction toward our next area of support, which was going to be, if we look at the structural formations, we had a lower high, we had a lower high, and we had a lower high. We were looking for a correction on the short term to 64,500, which we can see we exactly did. The big question is, are we going to continue upwards from here, or will we see a continuation? That is a question we're answering in the video in our short-term analysis today. Moving over to the broader market, so DXY has retested its major yearly support. This is going to be, of course, the established support since the 28th of December 2023. This is going to be our yearly level of support. If we bring up that RSI indicator really quickly, we can see if we draw our diagonal trend lines from those pivot points on the RSI to match the pivot points on the trend line, we can see that momentum in regards to the yearly trend has not yet flipped negative, and thus we do have a possibility for a bounce from this region. However, if we do see a breakdown of this trend line, that would be a yearly uptrend breaking down. This would be incredibly bullish for Bitcoin and the traditional asset market. We would expect the markets to rally very aggressively. However, guys, we don't have any indication yet that we are going to be breaking down from this level. We are currently testing it as support, and therefore we have to be open to the possibility for bounces. The determining factor in regards to where the DXY will likely go is going to heavily rely on what is said during the next Federal Reserve Jerome Powell speech on the 20th of May in 3 days. Again, they're going to be discussing inflation, potential movements in regards to interest rate reductions or hikes in the future periods. This is going to massively influence the direction of the DXY in the short term and could result in either a strong bounce or that correction below that we are looking for. If we move over to the broader markets, we can see on the short term, on the last few hours, we have seen a bit of a rejection from that recent high point. And you would know that for us to see a continuation upwards here, we need to close above that level on the weekly. We have 21 hours remaining for that weekly candle close. Of course, a weekly close above will be very bullish, indicating a continuation higher. While we are underneath this level, of course, we are still going to be chopping between our low at 5,000 to our high at 5,300 in this higher time frame horizontal range. The directional break determines the directional continuation. A break upwards results in a continuation upwards. A break below 5,000, a break we mean a weekly close, will result in a directional continuation downwards. Again, until we drop below the support level, we are expecting that macro continuation toward the upside. So overall, looking good on the macro. On the short term, we want to see that weekly candle close. If we don't get it, we could see a short-term correction for the S&P. Moving over to the Dow Jones, a very similar scenario. Again, for us to see that directional continuation upwards, we need to break over that local high on the weekly. That will trigger the continuation. Until then, we are ranging between our low at 38 to 37.7 and our high at 40.03. So we're looking for, again, directional breaks results in directional continuations. A break on the weekly of our low will result in a high time frame downtrend. Very, very bearish stuff. Again, while we remain above this level, we are expecting those macro continuations. On the short term, we are testing a bit of resistance here at the psychological level of 40,000. So we have to wait and see what happens over the next 24 hours in regards to this candle closing. Let's go ahead and jump over to Bitcoin now. A quick word from BitGet and BingX before we do. I wanted to briefly interrupt today's video to discuss the two exchanges we use on this channel, BitGet and BingX. So which exchange should you sign up to? If you look to the right hand side of the screen, you're going to see the list of differences in relation to KYC requirements and the countries these exchanges offer services to. The first link down below being the BitGet link and the second link down below being the BingX link. No matter which link you sign up to, you're going to get up to 15% discounts on your trading fees, up to $5,000 in trading rewards, and of course, you'll get access to every single MegaWhale exclusive bonus campaign we run on these exchanges. Alongside that, BitGet and BingX are incredibly similar. They are both ranked top 10 in terms of trading volume. They both have extensive liquidity pools and market pairs offering up to 125x leverage. And most importantly, they both offer protection funds for their users to protect you against any third-party hacks. So get started now and support the channel by clicking the links below. Thanks for listening. Okay guys, let's go ahead and jump on into it. So in today's video, we're going to be starting on the macro charts and then breaking it down to the short time frame and then discussing the possibility for our altcoin season at the end of the video. So in the start of the video today, in the intro, we said there was a possibility we are seeing a repeat of 2017 based on a combination of two indicators, which are going to be our market cipher A, which I've actually got my own individual settings on. These are my settings if you want to copy them. We're specifically focusing on the 50 EMA, which is going to be that red line, and of course the Gaussian channel indicator, and we're on the 2-week time frame. What we have noticed, guys, is back in the 2017 period, we saw a period of where the Gaussian channel was red. After that, we of course moved into our green section, and not too soon after, we saw the 50 EMA break out of the upper band of the Gaussian channel indicator. We saw the 50 EMA cross over the upper band. At around the same time that was happening, we were retesting that prior all-time high point. So I've gone ahead and put a box around that region. What we can see right now is we're seeing a very similar style of pattern. We're seeing again, we saw the period of red on the Gaussian channel indicator. We have crossed over into the green phase, and while doing that, we have seen the 50 EMA actually cross through the upper band of that Gaussian channel indicator, and around the same time that is occurring, we are seeing a retest of that prior all-time high. So we're seeing an exact repeat in regards to this 2-week technical pattern that we saw in 2017, which eventually resulted in that macro continuation upwards. Very interesting stuff, guys. It is telling us that we are seeing a possible repeat of this 2017 cycle. And this isn't the first indicator that is suggesting that. We have multiple indicators that we'll be going over in just a moment that actually show potential repeats of these parabolic cycles. Again, this is another indicator that is suggestive that we are likely going to see a parabolic season for Bitcoin. And for us to trigger, we need to break back above that high point. Again, that high point is going to be that trigger for that continuation. If we look in the short term, where that high point is, it is at 69,000. As we know, if we break above 67,000, as we've been discussing, we'll discuss in today's video again, that is the trigger for a continuation into the range high, which would, as a consequence, break over the 69K region, which would trigger that monthly break of the prior 2021 high point for the second time, validating a continuation upwards, retesting the 73 to 74K region from a position of strength in regards to momentum, which increases the likelihood of a macro continuation through, resulting in the initiation of that parabolic phase. Again, we'll discuss what can happen in the short term in a moment, but that is the essence of it on the macro. So looking at this chart again from the macro perspective, we are seeing that 2017 repeat essentially as of right now. There's no confirmation that we are going to see that parabolic phase with 100% certainty. Of course, there are elements of risk that can pop up in the market that are unpredictable or not visible at the current particular period of time, meaning things that can develop within the market or in the economy that can change perceived systematic risk in a market that we cannot see or we cannot predict right now. But as of the data we have currently, as of the data we're seeing on the technical and structural levels, it is suggestive of a possible repeat. So a very good indicator to look out for. Again, it is suggestive of that high time frame strength that could develop into a parabolic season. The next indicator we are looking at is going to be on the weekly. Again, we discuss this one pretty much every day now because it is just such a significant indicator, and a lot of people are viewing the channel who haven't seen this channel before, so I do want to be discussing this because it's just really, really important in not only predicting the parabolic season, but the reason this indicator is so important is because it gives us an invalidation of the parabolic season. If we get that invalidation, that is when we no longer expect the parabolic season, which is why this indicator is so powerful. But it's not only is it showing us similarities, but it's showing us clear invalidation points that we can utilize to either predict the initiation of macro downtrends or the initiation of, again, a possible bear market. So if we look at this indicator, the indicator is very, very simple. It consists of 3 points. We'll go over very briefly. The lower band of the pi cycle indicator, the red line breaking into the Ichimoku cloud, is point number 1. Point number 2 is the price action retesting the 2021 or the prior all-time high. At the same time, it is retesting the pi cycle high. That is point number 2. And point number 3 is that the price action remains above the yellow and green, so the high short and low short moving average / EMA, up after the point of which we see the Ichimoku cloud break onwards. So from the point of which number 1 occurs onward, we see the price action remain above those midlines. The invalidation of the uptrend is when we see the price action break down both of the green and yellow lines. That is when we see a bear market. That is when we see a macro downtrend initiate, as we can see here and as we can see over here, guys. That is when we've seen those macro downtrends initiate. So we look back at prior cycles, we can see that in prior cycles, we've had exactly the same validations. We saw the breaking of the Ichimoku cloud, the price action remains above the midlines, so we've had parabolic season through that all-time high point. We've got point 1, we've got point 2, we have got point 3, and we enter that parabolic phase for Bitcoin. If we look at the prior cycle before that, we can see exactly the same thing occurs. We have point number 1, we have point number 2, and we are sitting above the midlines the entire way up until we break down and enter that bear market. Now we can go ahead and look at even our earlier cycle. Exactly the same thing over here, guys. Again, we see the break in, we are retesting the high point, point number 2, we are above the midlines until we break down and create the pi cycle high. So we can see that if we follow exactly what we have seen the last 3 times, which we are seeing now for a 4th time, it is telling us we are expecting macro continuations upwards to create a pi cycle high, okay? To create a pi cycle high before we break down from these indicators, which tells us 2 things. we would not expect to see a top until we create a pi cycle high. And number two, if we were to break down below these pi cycle midlines, we would see a early top or a continuation into a macro downtrend. Now that is just one thing. What we can do and take it a step further is we can use the Vortex trend indicator. Now I've got a lot of questions. Whale, what are your settings on the Vortex trend indicator? I'm going to show you here. This is my settings, 40/20, simple, keep it easy. Okay, they are custom settings. What we can see here is that the Vortex trend indicator matches, okay, the tops for the pi cycle highs. It matches the tops for the pi cycle highs. So we have double confirmation. It indicates that again, until we see a Vortex retest, we are not going to see a pi cycle high. And if we don't see a pi cycle high, while the price action is sitting above the midlines of the pi cycle indicator, the top is not yet in, and thus we are expecting a continuation into the parabolic season. Now this pattern that we have seen is not going to last forever. Of course, every pattern comes to an end, but we have to assume the pattern will remain intact while the invalidation point is not met. If the invalidation point is reached, meaning we break below the pi cycle midlines at 57 to 56,000, then this pattern is no longer expected, and then we expect a downtrend. But until that happens, until that point, the data is suggestive that we are moving into a parabolic season. So now let's go over to the higher time frame and talk about, that invalidation point. Like we said already, for us to invalidate the bull run, for us to invalidate the macro uptrend and enter a macro downtrend, we need to see the pi cycle midlines invalidate, which is a 56 to 57. Where does that locate? Well, if we look at this macro uptrend, this is a 7 to 8 month long macro uptrend. We can see this converges to a point around 57 to 58,000. We have again on the POC, on the VRPV, a strong gap below 57 to 52 right over here, suggestive of the entrance into a possible macro downtrend. If this trend line were to break, this trend line matches perfectly the pi cycle midline indicators on the weekly. So again, we have confluence here from a technical perspective, and we have confluence with that on a structural trend-based perspective on that higher time frame. Let's move over to the weekly charts and then come down to Bitcoin's price action. So a bit of a longer video today, guys. We have a lot to get over, but it's very informative. So let's get into a weekly chart looking really, really good. Again, we discussed this yesterday. We have 3 days remaining until the weekly candle close. Currently, weekly candle close is fantastic. It is absolutely fantastic. It is the most bullish candle we have seen for Bitcoin basically since March 2024, right? It's the most bullish candle we've seen for a few months now, okay? What we are seeing here is a bullish engulfing candle, meaning the candle has opened and it is currently sitting at a price point greater than the prior opening price of the prior red candle. It is engulfing the bearish candle. This is again a very strong indication of a potential macro reversal or a reversal in general starting to play out. For this to validate, we need to see a 3-day close. A weekly close, which is in 3 days time, above the opening price of that prior red candle at $64,000. $64,000 is where we need to close above on the weekly to see a confirmation of that bullish engulfing candle and thus a likely directional continuation upwards. Going to the smaller time frame, 64,000 is sitting basically at that POC level on the VRPV underneath our current area of support, which is why we told you guys yesterday we are likely to see a bounce from this region. We'll come back and discuss that in the video in just a moment. Moving back over here, what we else are seeing is a support resistance flip of the 60,000 region from the 2021 pi cycle high. This is our pi cycle high. This is our real high. Our real high resulted in deviation above the pi cycle high. We broke under that, and this was actually deviation from the high point, the pi cycle high point, which resulted in a bear market initiation and a macro downtrend. What we are seeing here is a support resistance flip of the prior pi cycle high, which is again a bullish indication for a macro continuation upwards. Only if we break below this level on the weekly would we see a macro continuation downwards, which would likely break down and retest those pi cycle midline indicators on the weekly chart. Bearish stuff. Let's move over to, again, the total market cap real quickly. What we can see exactly the same stuff playing over here. Weekly retest. Awesome stuff. Bullish engulfing candle, amazing stuff. Support resistance flip, fantastic. Weekly directional continuation upwards provided it holds. If we break below here, we expect macro continuation downwards. Let's jump into Bitcoin's price action on the short term. Again, guys, longer video, a lot to get into. Let's dive into it. So, If you paid attention to the last 24 hours, we told you guys, Bitcoin was likely to see a short-term correction towards our major $64,500 support, which we saw right over here. The reason why we said that is, again, guys, we saw this was going to be that higher low point in that multiple downtrend the multiple downtrending higher lows we've had, okay? This is going to be our prior higher low. We broke above that higher low, showing for the first time in like literally April, May, June, a month and a half, some real strength on Bitcoin. So this area is now going to act as a support. Remember, prior resistance becomes future support. So we're now sitting here as an area of support. On the short term, we are expecting a continuation upwards and through the $67,000 resistance, okay? We are expecting that, provided this support is able to hold. Provided we hold the support, expect a directional continuation upwards. If we break above $67,000, we are expecting a continuation aggressively, okay, up to this high range at 71.5, potentially to 73,000. This range is likely to be retested again this month if we break through $67,000, and we are expecting to break through $67,000 provided this short term is able to hold as support. That is literally it. We don't need to complicate it anymore. Support is support until it's not. We are retesting the support. We are moving into resistance from a position of strength that we have not done so in the prior attempts. Therefore, this retest will be a position of strength rather than weakness. It is looking very good if we break through here. Moving on to the higher time frame again, guys. If we break through 67 and move up into this range, that will be the first time we are retesting the 74 to 73k region from a position of strength. If we look over here, this was a bearish divergence on the RSI. I'm not going to bring it up, but that was a bearish divergence on RSI. Okay, we retested a second time, which was in a downtrend on the RSI, not the price action. We were in an overall downtrend on the RSI, again indicating this retest was a retest from a position of weakness. And now we will be finally retesting from a position of strength. So we already know the bullish case scenario. It's quite simple. Expect a continuation. But let's talk about the bearish case scenario. What would need to happen for the bears to reclaim control? What would need to happen for the price action to break down here, push below 60, break those midlines? What would need to happen on the short term? Well, first and foremost, we would need to see a loss. Okay, we're looking for a 4-hour close below this horizontal support level. The next area of support is going to be the POC level, and then we have got our short-term uptrend. A loss of the short-term uptrend is when the sellers take control. So again, a loss of this level, we see aggressive weakness in the buyers. A loss of this level, the bears are back in control, and they are likely to push the price back to 60k. If we see a retest of 60k, this would be again a breakdown of our higher low, indicating similarly to what we saw over here, a break of the lower high, the bulls taking control. That would indicate the bears are taking control, and we then expect a continuation down to 57 to retest the pi cycle midline indicator. At that point, again, we are going to expect a bounce from 57, but if we lose 57, expect a correction and into a macro downtrend. So that is what needs to happen for a macro downtrend to initiate. 1, 2, 3, 4, 5, 6 levels of support would need to break on the short term for that to happen. That is going to be it, guys. I said we were going to go over altcoins and the parabolic season. You know what? We just ran out of time. I don't like to do our videos too long. So we'll go over the Bitcoin dominance chart, total crypto market cap, and the possibility for our altcoin season on our second channel, our altcoin channel. So we'll go ahead and do that in another video, maybe even tomorrow. So we'll catch you guys in the next one on this channel on Sunday. Have a fantastic day. Hope you learned something. I'll catch you guys then. Cheers.